Good morning. This is Larry McMillan with a stock market update on Monday, March the 10th. I waited a little bit this morning just to see how this market is reacting before recording this comment. The market's not reacting well. It's down quite a bit. And so we've fallen below the bottom of the trading range, not by a lot. I mean, the support area that was dated all the way back to last July is at 56.70, so we're still close to that. This market has been a little bit famous for looking like it's breaking out and then not, but we've come down a long ways, and it's certainly a bearish market now. The oversold conditions are building up, and they will lead to some buy signals. Typically, an oversold rally will get back up to about the 20-day moving average, which is now about 400 S&P points above where we are. So that could be a healthy but not necessarily lasting rally. The S&P chart, of course, is in a downtrend now, and as I mentioned, the support of 56.70 is important. If we close below that, then we're definitely heading probably into a core bearish position in a longer-term bearish market. The equity-only put-call ratios remain on sell signals as they continue to rise. You might expect there'll be a lot of put buying. One oversold condition that's in place is that S&P has fallen below the -4 standard deviation modified Bollinger Band, which will eventually sets up a potential McMillan volatility band buy signal, but not every time. So we'll just have to wait and see if that develops. That's the same thing with really any oversold condition. We don't just buy because the market's oversold. We have to wait for actual confirmed buy signals. Breadth has been poor. It's been better on the New York Stock Exchange than it's been for stocks as a whole, but still is poor. And so the breadth oscillators, they are also very oversold, but it takes them a while to turn around, especially from these deep levels. New lows continue to outnumber new highs, so that's another sell signal that's in place, another bearish indicator. VIX is in an uptrend. That's also a bearish indicator. We call it the trend VIX. It's on a sell signal. The only buy signal that we actually have right now, and it could be stopped at as early as today, there was a VIX spike peak buy signal. In other words, VIX spiked up last week and then came back down again. Frankly, VIX is not racing to the moon. It's just kind of rising gently, and that's more typical of bear market action than it is of, say, something like a crash or a pandemic or something like that. So the other area that we often look at is the construct of volatility derivatives. In other words, the term structure of the VIX futures. That has turned bearish as well. So just about everything we are looking at is bearish. Many things are oversold, though. For example, in that term structure, VIX is trading higher than the 3-month VIX, which is very unusual. It's a big oversold condition. And when that alleviates itself, you get a strong, perhaps 1-week rally. But the market can rally a lot in a week from an oversold condition. So overall, we have a lot of sell signals in place. We are rolling our puts down as they become deeply in the money. And, I caution you that oversold does not mean buy. So wait for confirmed buy signals before you jump in front of this, what's now a bearish freight train. Meanwhile, I invite you to visit our website, take a look at our daily newsletters if you want to keep up with this market in a more timely manner. Meanwhile, have a great week trading.